So welcome to the GIMI think tank. This is our weekly webinar on innovation and innovation management. We cover three main topics in this webinar series. We talk about the trends of where the world is going, what the future looks like, what it's going to look, what's happening, whether it's technology trends, whether robotics, AI, whether nanotechnology, whether healthcare, or whether venture capital, or whether it's how money will actually affect the way innovation is going to happen. So we watch those trends. We have a second part of the series where we cover innovation management. How can we become better at managing innovation? How do we take ideas to commercialization faster? And here we get experts from professors, consultants, innovation officers of big companies. And then there's a third one, the part of this webinar that we talk about is what's going on in different countries. We want to know what's going on in innovation in Japan. We want to know what's innovation in Colombia, what's going on in Korea, what's going on in Brazil, what's going on in other parts of the world. Sometimes a speaker comes along and is able to cover all three of them, whether it's a trends about venture capital, whether it's about something going on in Brazil, or whether it's something specifically on how the entrepreneurs of that country are using and finding a better way to get ideas to commercialization. We are honored today to have Carol Strobel, who is from Brazil, from the venture capital community, who's going to give us insights of what's going on in Brazil. I think this is going to be a great presentation because never forget, ideas to commercialization needs people. People need to eat. People need to get money to do what they have to do. There are two sources of money usually, or really three sources of money. One is from the customer, which is the ideal way to build a business. The other one is to get money from friends and family. They'll hate you if you screw it up. And there's venture capital, which understands the risk and manages that appropriately to say, how can I be an equity owner to do what we want to do? But without money, many of the things that we want to do cannot happen. We're going to learn about that with Carol. So I'm going to let Larissa introduce our speaker today. And then Carol will have 20 minutes to speak, and then we'll do Q&A and go further on that. So Larissa, I will give you the spotlight.
Good morning, everyone. I would like to introduce you to Carol Strobel, the operating partner of Redpoint Ventures, which is the first Silicon Valley venture capital fund on ground in Brazil as of 2012. The company invests in consumer internet, mobile media, and cloud services sectors. She will tell us more about that later. But Carol has a vast experience in the ecosystem of startups and innovation in Brazil. She was the legal director of Untitled Chapter for Latin America, with a focus on venture capital, private equity, and mergers and acquisitions for over a decade. So she has vast experience in this sector, and as well, she participates in the board of directors of diverse companies in Brazil. And today she will be sharing us some insights about this fast-growing venture capital industry in her country. So Carol, the floor is yours. Thank you for being here, and thank you everyone as well for watching.
So hello everyone. Larissa, thank you for the introduction. Trenda, it's a pleasure being here with you guys today. I apologize for any background sound, but of course everybody's now fixing their own houses due to the pandemic. So apologies, but it happens. I wanted to talk to you a little bit about the status of venture capital in Brazil. I have been working with venture capital since 2001 in Latin America, initially with Untitled Capital and now with Redpoint Ventures, because I think we have done an amazing thing from an ecosystem perspective in Brazil. And I wanted to share with you what's going on and the opportunities we have been seeing here and how venture capital is able to change a reality for entrepreneurs and for the population. So let me share my screen with you so that I can have some support here regarding the presentation. And the idea is basically a mindset. And we're going to talk about, we're going to have a Q&A later, but first of all, I wanted to show you what's the portfolio for Redpoint Ventures. And you can see it has, several verticals. We're not talking, Redpoint Ventures only invests in tech. And I have been investing in tech for all those years. So we have fintech, e-commerce, software, B2B, normally SaaS, health tech, edutech, prop tech, clean tech, which is a huge vertical growing in Brazil. and so that you have an idea of the exits we have been doing. As of now, I have 4 deals on my table, 2 exits, another 2 exits coming out. So it's amazing the liquidity, the vast liquidity we saw in the market, or we're seeing in the market, and that we're using right now. So as you know, within the last 10 years, the technology has been dominating the capital market as a whole, especially when you see the public markets in China and the United States. So you can see that, you know, how it changed the value, the value chain has changed from the 10 last years. It was clear that the main vector for the economies was fossil fuel, and it changed to technology. And it's amazing when you see this reflecting into the values of the company. And this is just for, you know, to keep you, to make sure that you understand where we're coming from and how the economy has been changing as of lately regarding technology. During the pandemic, it was very clear that COVID brought a very fast down for the tech industry. So we could see here in March 2020, how, you know, the prices were affected for, you know, public companies in technology. And you can see what happened after. So the acceleration that it brought, it was much more than a V curve. It was very, very fast. We could see that. And just to make sure that you understand here, I took off Tesla to avoid the distortion, because Tesla was like over 1,000% high. And I left only, you know, Apple, which was over 100%, over 100% growth as well. So you can see that the crisis basically strengthened the position of technology in the public markets, and how technology was key to make sure that we would go out of the crisis per se. So technology was seen as a tool. It accelerated the process. And there is one book that I think it worth reading from Scott Galloway, New York University professor for marketing. He wrote The Four, which is a very interesting book about technology companies. You probably have read this one already. But there is another one called Post-Corona. It's a small book. Worth reading it. It's worth reading it because he sees how technology will be more and more the main tool to change the world that we lived in and the world that we need to live in from now on. So this concept is very, very interesting from his book. And then it comes to how venture capital had better results year after year in comparison to other major asset class. So if you compare to private equity, to real estate, venture capital had a higher return over the years. But of course, this was not built now. This was built a long time ago. And we're going to see this as well. We're going to talk about this. But we need to understand that the companies, they begin as startups, they get fund after fund to grow and reach their highest potential. And in this path to the highest potential, there is venture capital. And of course, the bets, and I wouldn't call a bet, but the investments that are being made, they are only going to reflect, you know, the final results in about 8 to 10 years. In Latin America, it tends to take more time than in the US. In the US, I would say 7, 8 years would be enough for a company to escalate. It's not the same in Latin America. It takes a little longer from my perspective. So that you have an idea, here in Brazil, we have over 35 unicorns. It's closer to 40, actually, nowadays. So these unicorns were basically, and they are everywhere. So we have in fintech, we have games, we have prop tech, we have logistics, we have credit. We have, you know, They're everywhere. And why do we have those unicorns now? The ecosystem 10 years ago didn't have what we now have as the growth capital. So we used to have investors ready for seed and early stage companies. And when I'm talking seed, like, startups that are beginning their traction and they are in Series A, Series B. But we were missing in the ecosystem investors that would go through Series C, D, E, F. This would be the hard ones to find in the ecosystem in Brazil. But this gap was basically closed when we had SoftBank coming in, General Atlantic, Tiger. These groups, they began investing in growth capital. Growth is a little bit, it's venture capital still, but it's a little bit different because they enter in a stage where the company is already in a high valuation, and they are able to escalate the company much faster, and they get out faster. So it's 4 to 5 years for a growth fund to exit a company. It's a little different. But this was a gap that we were missing here in the Brazilian ecosystem. And this was covered from 5 years, 6 years ago when SoftBank joined Latin America. The role that SoftBank had in venture capital in Latin America was and is huge. And as a huge role, of course, there are two sides of everything. There is the bright side and the shadow side, I would say like this. But what I can tell you is that they changed the way venture capital was being made in Latin America, no doubt. And they're having changes in their teams as we speak. This was recently publicized. They changed their team and they're doing things a little different than they were before, but still committing to the region, which is very, very important to the entrepreneurs as of now. So that you have a clue, these are an idea. This is the main unicorns we have here. These were the latest ones. So Banco, there are banks, there are marketplaces, SaaS companies, they're everywhere. When you compare these numbers, of course, to Israel, to China, to the US, they are minimum. And that's the same regarding venture capital. So we have lots of funds which are being created right now for venture capital in Brazil. And people tell me, well, but there are so many funds being created. This industry is already full. And what I can tell is this industry is far, far from being full. We do not have, we are in a minimum size in comparison to other countries. And this is the industry that really can change the life of an entrepreneur that needs funding to escalate. And this is the industry we should be looking into when we're considering innovation for a country. Of course, it's not the only industry, but this is the industry you should be looking for. So the government should be looking into venture capital. Endowment funds should be looking into venture capital. And this is what surprises me. When I see endowment funds, they're much more concerned about the financial results than the strategic results for humanity somehow. Because innovation lays in the founders that are all around the globe, of course, and that should be invested on. Innovation lays on people. And, we are having founders getting each time more ready to compete in a global world, but they're missing funds to do so. And we should make sure that this doesn't happen. So corporate venture capital and venture capital has not, they're been on the rise for a while in Latin America, and they reached the point that I believe it's not even close to where they should be. Let me move. So that you have a notion how a unicorn is created. And unicorn, of course, it's a company that has over $1 billion in valuation, okay? And we're not talking about decacorns here in Brazil. We already have decacorns, so $10 billion valuation. I'm not going to take the time here now to discuss whether we should be having this billion or $10 billion companies and whether they should escalate as high as they have been escalating. But what I can tell is that the effect that a unicorn has in the in an innovation ecosystem is huge. The unicorns are able to make changes to the world, to the business models in a way that regular companies cannot do. So the Brazilian ecosystem has been maturing, and we know it's been growing over the years. And you can see, like when Movil, for instance, which is one of the unicorns we had, Movil in 2008, it was created in 2008, and it was reached the status unicorn here in 2017. And there you go, all these companies, they had all these investments being done over the years so that they would reach unicorn size. And of course, it's getting faster from 2013 on, 2014 on, when we were closing the gaps in the ecosystem. So when we have an ecosystem that really works, it foments, it makes sure that the industry will evolve. It helps the industry to evolve, right? And that's what we're looking for in terms of innovation. What is interesting about Brazil itself is that it is a large market. It's one of the largest markets if you look here. So we have China, we have the United States, we have India, and here is Brazil. It's a huge market. It's the 6th largest population with one language and one law. And that's quite unique. And the 7th largest economy in the world. And we now have a robust ecosystem. So we don't have the gaps in the funding industry, and mainly because of SoftBank, Tiger, General Atlantic, and other groups that are coming in to close the gap in the growth capital. And we have the scale to support the funds, because a fund costs a lot. So you need to have expertise. You need to have the experts to work in the fund. You need to have the structure to work in the fund. It's very expensive. It's not something that you can do on scale as of now. So to pay for all this cost, you need to have an extra amount of investments or an extra amount of portfolio companies to invest. And this is very important as well. So the pipeline needs to be there, the ecosystem needs to be there, and the investors for the fund needs to be there as well. And we're seeing all this with the liquidity that the world faced during the last years. This was all reflected in the venture capital industry here as well in Brazil. Besides all this the situation in Brazil, so the opportunity we see in Brazil per se, we also see opportunities within the inefficiencies. Brazil is a highly inefficient market. And this, for a venture capitalist, is like music, because it is easy to escalate a solution if you have the right solution. So we have 29% of functional illiterates, but we have 97% with mobile phones, 71% people that can access internet, and 66% in the social media. It's a quite unique situation that we can take advantage of, in terms of innovation. Besides, there is a huge inefficiency in the hours taken to calculate tax. And whenever you calculate tax, there is a sentence saying that, even in Brazil, even the past is not trustable, especially regarding to tax. So it's a very tricky matter for Brazilians. And the logistics performance of Brazil needs improvement. And all this is music to venture capitalists or to companies or to entrepreneurs that want to change the way things are being done. And in health, the universal health system only attends to 20% of people. And by showing you this, and every time I show this slide, people tell me, but Carolina, why should we invest in Brazil? Brazil is not actually being it's not a perfect market. It's not, a market that it's ready. And I keep telling them, well, that's why, because it's not ready. There is an opportunity here that we can see. And now what we're seeing, and I spoke a little bit about the effect on the public the public market regarding tech and how it accelerated with the COVID. And now we're seeing the opposite. Now what we're seeing is what we call the tech wreck in the United States, or the possibility of a stagflation in the United States, and inflation for sure here in Brazil. And what we can see is there are several funds going out of venture capital and going into the public markets, because the prices in the public markets for technology, at least, they're getting more reasonable. They're getting into the valuation that they were supposed to be. Several people are even telling that we are, we were in a bubble and now we're bursting the bubble. But I don't believe we are, even though the values are getting closer to what we had in 2001. The valuations, reductions in the valuations are getting closer to 2001 levels. Still, I don't think we are in a bubble burst. We are in a tech wreck, where the valuations for tech companies are getting closer to what they should be. And now what we're seeing is people flying out of venture capital, going back to the public markets and making their bets there, or making their investments there. But over time, and that's cyclical, as it is in any industry, it is very cyclical for venture capital as well. Investments done in the rounds that we do in years where there are difficulties in investment, or more inflation, less liquidity, they're much better in a crisis, for instance. So investments done in years in years of crisis, they're much better, or they result in much better results. They get to much better results over the years. And that's like, I'm going through my third cycle in venture capital, and it's around 10-year cycle, 8 to 10-year cycle each one. And I'm pretty sure of that. Every time we are in a crisis, that's the time to invest. That's the best time. That's the time you're going to get the better founders, the better valuations, and the companies that really will go through the other side stronger. And that's what we're seeing right now. So the market, it's important for the market to have this cyclic, the cycles as well, because then you can see who are the people that actually stay in there. So we're now in a very interesting time of the market. But what I can tell you is it's a company that's growing faster, not there yet. There are plenty of space. There's plenty of space for everyone to join this industry still. And it's an industry that has been creating unicorns and companies that are escalating globally, differently than in the past. So we're being able to do that. And I think that these were the main messages that I want to share with you, and then get myself ready to have a discussion and a conversation with you guys.
Carol, that was great. That was a great description of the venture capital environment, as well as the way it's evolved, and the opportunities. So I'm going to summarize some things that I heard you saying. I mean, there was a time there wasn't enough capital in the scale-up growth in grown-up space, and you have money coming up now supporting scale-up and grown-ups into being successful. And when you link it together, the gaps between that has been wonderful to create the unicorns. The second one is that the very inefficiency, the very problems of Brazil is actually the opportunity. And those are the barriers to entry. And if you crack it, then you're going to make a lot of money because others can't copy it. And at the same time, there's a huge untapped market. So why wouldn't you want to pursue the hardest challenges, of course, which are going to be advantageous to you so nobody else can copy you, and at the same time, unmet needs of consumers just waiting for this type of solutions. Second part was that. And then the third part over here is you guys are showing lots of case studies. I mean, I did not expect 35 to 40 unicorns in Brazil. We talk about the United States like that. We talk about certain parts of Europe like that. But I didn't expect that. That was a surprise for me in the conversation. So lots of interesting things. People are getting prepared to ask questions. I want to ask a couple of questions, which is, what is it that you have seen as you make investments into this types of companies, as you invest in these companies? What are you looking for One, in terms of the ideas that are most likely bankable for you, and then the profile of the teams in terms of what about them makes them bankable, and then ultimately what kind of traction do they need to show that makes them bankable. So I'm gonna organize those things in 3 questions. You can take one while the rest of the people start putting questions in the chat, and we'll kind of organize that, and then we'll go further. But it was basically from your perspective, what's bankable in terms of the types of ideas and the types of teams and the types of traction that they need to get.
So you touched 3 points which are essential when we hear a pitch or when we're talking to people that want us to invest. The first is people. This is the most important point because business change, the world changes, as we could see in COVID. So if you don't invest in the right people, then nothing lasts. And when we talk about investing in people, you're looking for, of course, resilience. You're looking for someone that can hear other people as well, hear the investors or hear other people. It doesn't mean that this person will follow other people, but it will hear, it will listen to other people, advices. That's pretty important. And of course, we're looking into someone that sees the world different and is willing to do so, because it's not easy. Some people tell me, well, I'm going to be a founder of a company. Well, get ready for, for the hugest adventure you ever had, because it's going to be like at least 7 years of, a lot of pain and suffering until you get there, and a lot of work. Some people tell me, I have a great idea and I want to found a startup. But can I work like 5 hours a week, 10 hours a week? And say, no, it's not going to happen. It's a lot of hard work. It's 24/7. I don't know when, people decided that, well, we're going to work 10 to 20 hours a week and it's going to work. It's not. It is not. If you want
let me stop you on that one. I think that's a great point. And right now, we've made innovation and entrepreneurship kind of fashionable, kind of cool. We've made it such that everybody can write a business plan and pitch, and we've made it very easy. But most of the time, we do not talk in business school or coaches and mentors that you will have to work hard. And you got to look in the mirror and say, are you willing to work hard? And it's the same in a company or outside a company. An entrepreneur or entrepreneur always puts in a lot of hours, and they go to sleep last and they wake up first, and they're basically pushing all the time. So that's a great message for us, because a lot of the people in our community are from innovation management in big companies, and we are telling them about, it's a methodology. No, it's the system that we put in place, but we do not emphasize what you just said. Are you as a team ready to work your ass off? Are you going to put the hours in? And what is the way you can test that? So I'll throw this question back to you. How do you know they will work hard? How do you get the evidence?
Well, skin on the game. So again, they're not going to have a high salary. They want to make the impact. We talk about impact, funds. Sometimes they have impact in their thesis, and sometimes they don't. But funds in Brazil, they normally have impact naturally, because it's so huge. The market is large, and it's such a huge opportunity that impact it goes naturally through the whole thesis. So when you look into a team of founders, and that's very important that you said, it's the team. Someone asked me, would you invest in only one founder? And I would say, no, it needs to have a co-founder, because it's a lot of work and this person won't know everything. So again, when I look into the team, I'm going to look into a team that can work collaboratively. So together, they can do things together, plus they are complementary. It doesn't help me if they are all men, white engineers. It is good. It's a great beginning, but I need women. I need different races. I need, different people, vulnerability. I need, different visions to grow. Do you have to have everything since the beginning? No, you don't. As long as you're willing to have that. So this willingness of seeing the world different and building it different is what we look into when we make a due diligence, right? It's a conversation.
That's great. For us from innovation management, helping companies innovate, we emphasize the team. We emphasize diversity. We emphasize that the consumer market is 50% female. So you better have females on your team. We emphasize age diversity. We guide all this thinking in the teams if we can. But the message that rally is, it's very hard for us in the corporations, is they're used to the 8 to 5 and they don't get paid money for the reward. So if the entrepreneur is successful, they financially benefit. But when you work in a company, they don't financially benefit. So we have a tougher time motivating people to put the extra work in, the extra effort in, and to think about it. So that's one part. Let me switch on the second question, which is traction. What traction are you looking at? Because everybody can put a business pitch together nowadays. There's enough videos to tell you how to pitch, that you'll use your garage, you'll use your credit card, you'll do all the right things to make it happen. You'll eat sandwiches and peanut butter sandwiches to survive. And you use all the right pitches, and the VC will say, I've heard that one, I heard that one. But now the criteria for 20 years ago is not the criteria for today. What are the specific things that says that's that team, of course, and what they've done so far makes me believe that they will succeed? What are you looking for in terms of the business that they're building?
So let me first tell you something. I'm going to be brutally honest. I wouldn't invest in a team that I don't know, that has never been an entrepreneur, has never been in a startup or building something, and ask me, well, it's a pre-seed money and we have nothing here, just the idea. I would never invest in this team. But if it's an entrepreneur that had success already, and I know this person very well, or somehow I know the history of this person, and it would come to me and ask for a funding, for a pre-seed, I would be willing to give this. So it always depends on the history of the team and the founders, no doubt. But in general, what do we, for instance, at Red Point Ventures, the thesis we have is Series A. To invest in Series A, I have to do some seed, or I won't find myself in Series A. So I do seed, Series A, Series B. And then I go as much further as, the amount of money for that specific company, for the reserves that I have for the specific company goes. But that's what I would do. And what I would expect as attraction is a product that works well for some clients. So I would call the clients and I would ask the clients, hey, what do you think about the product? Do you like it? Is it doing well? It doesn't matter. The number doesn't matter as much as what the client's going to tell me and what the market tells me. So there is a huge opportunity in this market. There's no one else here, or the competitor didn't have this view, and it's difficult, or it's a market which is difficult to get in, but the solution is easier for someone to be in there. So that's where I look into, to avoid the barriers and work into those.
So Carol, that's great. I'm going to keep on drawing analogy to how we try and do the same thing in big corporations. So in big corporations, we look for teams, but the teams are given to us as to who's available. Unfortunately, you don't build your own team, but you build teams, hopefully, that are right for a team. But now when we try and drive them forward, or they say they've got a good idea, what we tell them to do is get an email from the customer to say, we love it, or if you build it, and send that email back into the company so you can show it to your CEO or show it to your manager or director to say that idea is real, that idea is bankable. So we do not believe in the team's opinion that's a great idea, but we ask to get the voice of the customer, and you are doing exactly that. You're calling the customer to say, is this a viable product or not? Is this something you'll buy, and all that. So again, from our perspective, we try and get the teams to say, stop saying, believe me, trust me, it's a great idea, but get the validation from the customer in their voice, if possible. So that's good. But let me ask you, often people don't want you to call the customer. Often people think that you'll make them make the customer scared, or they may lose the customer. Is that ever an issue for you about or do they say, let's go to the customer together, just to make sure that you don't affect the customer relationship of what is a beginning of a startup?
It is always a case by case sort of issue. So I can't tell you, I can't give you an answer. Would you give up an investment because of this? But as a matter of fact, I would give up investments if the founder is so concerned about that. That would raise me a red flag. Why can't I talk to a customer of yours? Quite by the opposite, you should be happy that I would do this. And so it is a practical, due diligence that we make. And to me, when a founder looks in this and says, well, that's not exactly what I want you to do, I would be concerned.
Yeah, no. So again, for our audience, I mean, what's the key lesson here? Transparency. If you can't be transparent about what you're doing, you're not transparent with your customers, you can't allow other people to talk to your customers, then you are managing a company by brute force. If you can allow people to talk to each other and share and everything else, that's going to be more likely to be successful. And I'm going to go back to this point. One of the things, Carol, that we see is entrepreneurs like to kind of hang on to the idea tightly and they don't want to share it. They feel somebody will copy them, somebody will steal it and run away. And so that they're very protective for whatever reason, thinking that they came up with the biggest idea on the planet, not often realizing that another 1,000 people have thought about it before them and probably failed or are even getting traction on it. But they tend to be very protective. And therefore, in the process of not sharing, they lose your interest perhaps, but they also lose the customer, they also lose new hires and everything else. How much of this new balance in the venture capital world, saying transparency and sharing your idea is a key component of success? And if you share it and somebody else copies it, it probably means that it's a bad idea anyway. So a good idea is hard to copy.
So I always get impressed with people that believe that the idea is something that can't be copied or someone else can have a better idea. The issue is not about idea. The issue is about the execution. You need to execute as a paranoid. And I think it's fantastic when people have the ideas. But it doesn't change the world. Ideas don't change the world. Execution changes the world. So when a person tells me, well, I'm not going to share something with you, or I need an NDA, or I need this, that, I normally look into a different mindset from mine. This is not what should be concerning you. You should be concerned of having the best team and the best instruments and tools to execute your idea. That's what you should be looking into.
Carol, I like that point you just made. Let's try and quantify it in terms of dollars or time, okay? How much dollars would you give for an idea? And then how much dollars would you pay or say for the implementation? What's the ratio that you would put for one or the other?
Of course, it would depend on the fund, but I would never invest in an idea. I can't execute. I'm a fund. I'm not in the business of executing. I can give several ideas, which I think are great, to people, but it doesn't help if they don't execute. So I would pay zero for an idea. It doesn't help me.
So Carol, what we say is $1 for the idea. They'll give you $1 for the idea. And then the amount of energy you put to implement is the team, time, assets, the lab, or whatever you're going to work in. And that could be even $1 to $10 million. So much of the money will be spent on the implementation. And so the value creation is in the implementation side of it versus the idea component of it. And so again, from the venture capital model, as we talk about this thing, it's very clear that you guys are focusing on execution. Our industry, the innovation management industry, has got two components: front end of innovation and the back end. Front end is the ideas. What are the big ideas of the future? And the other one is actually execution, implementation. And majority of the people tend to stay on the front end because it's kind of fun, it's easy, it's post-its and those type of celebrations versus actually a product or a minimum viable product and everything else. And the focus you guys have clearly is saying, can this guys execute? Can they execute? So that's really helpful. I have a question coming from Cristanto. Cristanto, introduce yourself, from where you're calling from, your name and the country you're from, and your question, please.
Yeah, thank you. Hey, Carol, I learned a lot from you because Indonesia is a very early stage of investing through venture capital as an investor to innovation. But lately, we have one or two, what they call it, decacorn already. But what I learned is that like as you said, also like the case of Indonesia, when you're talking about venture capital, then you invest in a venture which is technology based. And then when you talk about technology, most likely it's a digital technology. Very rarely, like what I'd love to see is actually, why don't you invest in environmentally friendly energy or urban farming or nanotechnology derivatives, things like that, which is not always based on developing softwares and then make application based on that. Why is it so? Because we don't see also much in Indonesia that venture capital invests on non-digital technology opportunities. Thank you.
It is, it depends a lot on the thesis of each fund and each investor. So when we invest in technology, of course, we're looking into results regarding scale generally. And we're not as looking as throughout, ESG, as we would call, in technology per se. But ESG comes out naturally in Brazil because of the impact that it has. But when we're talking about, for instance, corporate VCs, for instance, there is Suzano, huge cellulosics company here in Brazil, Brazilian multinational. They are setting up a CVC exactly to help them out, to help them out with ESG patterns, especially the environmental. So there are different objectives within the investments, and of course different theses, different tools, and different ways of looking into what you want to bring to your company. But it's more common that companies would look into this than funds. Having said that, there are specific impact funds, even here in Brazil we have several, that work exactly in the ESG pattern, working with carbon, with agribusiness, and trying to make agribusiness more friendly to nature. There are several things that are happening and going on right now. Just one thing that I want to tell you. The issue normally is biotech, because biotech requests a lot of money for investment and a lot of knowledge. So normally they come out of corporates that are used to do this kind of things. But funds, only when they're very specialized, they would go biotech. It requires a lot of years and a lot of investments, like vaccines, for instance. When the funds began entering into vaccines, it was exactly because of COVID, and in a later stage, the systems were already working. Yeah, it was, by the end, it's just because, we need a bust. It was much more like a bust than actually funding since the beginning. But this, of course, it will change. It is changing.
Carol, I think the question maybe more broadly asked, what Kristant is asking is the success in Brazil with its unicorns by focusing on new to the world unicorns, or really fast following on similar types of companies that we've seen emerge in the US or Europe, like QuickBooks, and there's accounting software now in Brazil, it looks like QuickBooks, or equivalent CRM system that's a Brazilian CRM, or equivalent version of something. Is that what we are seeing, or and in a country like Indonesia, where would you guide the people to focus their venture community? Because the funding for biotech is years. The funding for pharma is years of dollars, of $1 billion investment before you even get anything out of the pipeline. And so are there some things which are shorter term, where you can take talent from a university, students can do this? Or what is it that countries which were historically behind in science, they can catch up on digital, and therefore they can create digital solutions quickly around these things? Where is this, when you look at it really closely, what kind of startups are the unicorns that you see in Brazil? And that would be helpful for the rest of the people, like Indonesia, China, like India, and other places where they're trying to figure out, should we be first to the world? Should we be fast following, regional protection because of language or something? And therefore we can do local large economies.
Indonesia is a venture capital market which is very famous for gaming, very famous for gaming. So they are strong in this. What I can tell about the unicorns here in Brazil, they have different business model, like Gympass. And I don't know if you know Gympass, but Gympass is a health, it's a health company that is B2B. So it works with the HR of the companies and basically gives corporation a health pass that goes through different gyms. And this is a different business model, which was sort of created in Brazil. It's hard to say a business model was created in Brazil, but this was when it escalated. It escalated through a Brazilian company called Gympass. That's, I think, the most correct way of saying this. And then there is 99 Taxi, which is close. It's very similar to what the Chinese were doing. So instead of Uber, they were using taxi companies. There are several banks. There are gamings. They are not following, the models. They are creating their own models. Rappi, which is the delivery system. Of course, there are other companies doing this, but they're not following models. And these are, the unicorns we're seeing, the decacorns we're seeing. Of course, the digital banks are there as well, and then it's a model which is around the globe. It's not only Brazilian, but we can see that here in Brazil, because in Latin America, I would say, because of the market, they can expand faster. People are more used to digital banking than they are in Germany, for instance. I wouldn't see digital banking happening in Germany as it's happening in Latin America. People are more trustable. They are not as concerned with privacy issues as the Germans are, and they would download apps easier. There you go. There are several reasons why. I don't think they're following.
So Carol, that's great, and I think it's really important. I'll just give one call out to Brazil. Accenture went around the world looking for robotics companies to acquire, to get in the robotics industry, and the company they acquired was in Joinville in Santa Catarina in Brazil. And so therefore, in terms of competitiveness, the talent, the skills, the engineering, it was competing with the Germans, the Japanese, and Americans. And the Accenture said this is the one we should be acquiring as a result of it. So Brazil does produce what makes sense, but each region has got its competitiveness. As you said, Carol, gamification in Indonesia. In Brazil, banking and financing, Brazil was the leader in banking and financing for years. Because of the hyperinflation, they were able to transact faster, quicker to protect, and they create competencies. And those competencies allowed banking to be way ahead. And they had more IT engineers in Brazil than India had in the late 90s, because they were all in banking doing this kind of thing. So this competence is local, and each country's got its own stuff. Carol, we are getting close to the end of this thing because Leonardo is Brazilian, and he is going to ask you maybe a Brazilian question. Maybe not. Leonardo, por favor.
Thank you, GP. Thank you. Hi, Carol. I'm from Brazil. I'm in Ribeirão Preto. I don't know if you have been here. I have been in your office. It's the prettiest office that I have been in São Paulo. Thank you for Red Point, trust in Brazil, and bring so much business for us. I really enjoy. As Brazilian market, we have like a low education, low technology knowledge, and we see the platforms that make money. They have to charge for low ticket model or SaaS or things like that. Do you see any other kind of business that's for like consumer to consumer, charging medium or high ticket as a possibility to grow here in Brazil, because of the key factors like the low education model, the low technology, and low ticket?
Leonardo, so first of all, thank you for your question, and and for being in our office as well. Our office is in Cubo. It's an innovation hub which was set up with a bank, with Itaú. So they are, innovators as well in that sense. But what I can tell you is the peer-to-peer, for instance, sort of a credit line and the sort of things that I've been seeing in fintech, they're getting stronger, especially because of the DeFi, especially because of the blockchain and the cryptocurrency. So many changes are going to happen because of that. that it's difficult to map. And it's difficult to see who's going to win there. But what I can tell you is that blockchain and the cryptocurrencies are going to change the way the financial system is set up right now. And we are up to see how they're going to evolve with the stable coins, which are the coins from the countries and backed up by the countries, and how this is going to happen around the globe. But it's a market that is up to disruption, and we're seeing different things coming up every single day. Here in Brazil, we have a very interesting central bank that allows what we call sandbox, which are trials. So startups can do things differently than corporations if they are allowed in the sandbox system. And the central bank is very innovative in such a way, allowing these companies to do that. And they have a very important role in innovation and fintech. It's one of the reasons why Brazil is a leader in fintechs globally.
It's great. Leonardo, thank you for your question. Let's, as we wrap this meeting up, Carol, there's a lot of people who would love to figure out a way to interact with you, collaborate with you. Maybe I saw Truls from Norway. He's got about 50 corporates, 4,500 companies, where he finds startups who focus on the corporates and vice versa, getting the corporates to look around for open innovation, for ideas and everything else. And he sent a message on the text over there saying, how does an organization like yours collaborate? So maybe what would be helpful is, what is your strategic focus of your leads that you're looking for, deals you're looking for? What kind of partners are you looking for? And you may want to do a pitch yourself to the audience over here, saying, here's what I'm looking for. If you got this, this, and this, help me and I can help you.
So I wouldn't pitch for Redpoint Ventures, as we are now closed. So we are not raising any funds at this moment. But I would pitch for the Brazilian ecosystem and for the industry of venture capital. Of course, whenever an opportunity passed by me, I pass by others. And we are in a group here in the Brazilian ecosystem, and I would be glad to receive any pitches or any collaborations sort of opportunities that would come out of you guys. We, as a fund, Redpoint Ventures, do not invest outside of Latin America. We have investments in Mexico and Brazil. We do operate in Brazil, but we are holding in Delaware, of course. It's and then that's the structure we work with, which is the general structure for venture capital in Brazil. And as for any companies, the Nordic companies or any other companies that you would like me to introduce, please go ahead, send me an email, and let's set this up.
Excellent. Carol, we learned a lot today about venture capital in Brazil. And we learned a lot about also what kind of people look for investing into. And every one of us should look in the mirror and see if we are that sort of person before and deciding whether we're entrepreneurs or not. And maybe we can be consultants to other people, different risk level. We can be venture capitalists, different risk level. And we can be entrepreneurs, different risk level. And who are you? And don't pretend that you are all of them. All of us are probably very good at one or the other. And if you can understand that's probably one of the most valuable things that you taught us. And then in there, it's all about execution. Show me that you can execute. And also inside there, you mentioned you're looking for growth and scale, something that is able to touch millions of people or large number of businesses. And therefore the size of the opportunity grows quickly. Growth is what you're looking for. I think we've learned a lot. And the venture capital community teaches us in the innovation management space a lot of things, because Natura, or whether it's Samex, or whether it's any company, they're trying to replicate the external entrepreneurship inside the company. And there are distinct differences. And I'm going to just wrap this thing up with the distinct differences. The differences between a startup idea versus an idea that's inside a company is, first and foremost, who owns the idea. In a startup, it is the CEO or the founders. In a company, it could be given to a team to execute. So that ownership is really, really key where you're looking for. The second part of this thing is, how do you get funding? The startup usually borrows, steals, does whatever it can, but thinks very creatively, and therefore is ready to partner with anybody and look outside for help. While in a big company, we tend to say we got all the resources. We complain to the manager, where's the money, where's the resources, and therefore we are limited. So the tendency to look outside for help is very low in big companies, but the tendency to look outside is very high in startups. And you see that also in that environment. And then the part about how do you choose your team. In a startup, you choose your friends, people you get along with, and they're diverse. And it's very important, very important. You choose the people you can work with, you can smile with, work together, but it's going to be hell. It's going to be hell for many, many, many years, as Carol said. While in a company, often the manager says who's available. And the problem is sometimes Jane or John is available, but you got to ask yourself why they're available, right? They're available because nobody wants them. Right. And so you probably get a crappy team in a big company to try and drive something, but you got the teams. So you get average teams trying to get execution versus in a startup, you can actually choose the right talent if you're careful. And Carol looks for that specifically, looks specifically for the whole team to see how they look. Right. And then the focus isn't more Post-its and business plans and more PowerPoints. The focus is show me traction. Show me a minimum viable product inside here. And here, startups tend to focus on the customer to try and get a minimal viable product. Because Carol said, I call the customer to see what they think. While if you look inside a company, they spend time inside a conference room polishing the business plan or a PowerPoint, and they never get out with the customer for a long, long time. So get out and get testing on the customer. And these analogies are not, you can see they're different. We're trying to take an idea to commercialization. When a startup, there's different things you're motivating. While in a company, there's different things you're motivating. If you don't understand that, you think you can take entrepreneurship into entrepreneurship or entrepreneurship into entrepreneurship, and you'll fail. So we need to have very dedicated people like the VC community doing it the way they do, where we learn from them. And then they got a chief innovation officers in big companies doing it in their way. And they pretend they're VCs, but they're not VCs. And so they need to figure out how to act as managers in a managerial environment. So this is part of our lesson, Carol, for us. And the biggest opportunity we are seeing nowadays in the industry, Carol, is industry recognizes the agility and nimbleness of startups. And they want to partner. And they're creating all kinds of interfaces, including the innovation lab like at Itaú, to try and find these things. But they find again and again the failure rates are tremendous because of the culture and the styles of the two different types of people coming together, right? And that is our interface where I think is the next billion-dollar opportunity. Who can crack it? Who can figure out how a startup team can be integrated into a big scale-up company? And how do you do it properly? And most of us will say we should do it, but most of us don't know how to do it. Right? And so therefore, Carol, any last words on the summary that I had to present, and then we'll wrap this meeting up. But I just want to let you, I learned a lot from this conversation.
Me too. Me too. It's fantastic to see, with different eyes. And thank you for that. I appreciate very much. It is to crack the code about CVC or, how corporations can interact with startups. That's very hard. And I don't think there is, a receipt to everyone, one size fits all. I don't think that's the case. It depends on the strategic values that this corporation needs or wants to have. And, so everything goes back to strategically, what is important to you? And then how are you going to execute each one of these points? And how are you going to integrate the startups and innovation and, innovative mindsets within a culture of a company? Not easy. But as a board member, I have been seeing this happening in Brazil. And I'm quite happy with the results we got so far in some of those companies. But of course, it's not only one action. It's, several actions happening, and you're going to see the results with the time. Definitely.
Carol, you're a gift to all of us. So thank you very much. It was a privilege and an honor to listen to your advice and guidance. We welcome you back again in the future to speak over here with us. And we welcome you to be part of our webinar and come in, and we'll put you on the list if you're okay with that, and listen to different types of people speak, because we have diversity in our speakers all around idea to commercialization.
Can I have a few words for Carol? Hello.
Hello.
Yeah, can I have a few? Carol, I think Indonesia need venture capitalists like you. I met a lot of venture capitalists in Indonesia, not of your qualification. So if you come to Indonesia, I think you will make a lot of success. Believe me. Thank you.
That's great.
Well, let's accelerate, grow to Indonesia. But that's thank you very much. That's very generous of you, Chris. Thank you.
All right. Just want to say thank you very much. Truls, you're there too. Everybody, applause, of course. A digital virtual. Thank you very much for what you did. Really happy that you were here. And we'll stop the broadcast. Thank you. Stay on the line, Carol. And maybe we'll just move this informal now into just everybody on the group so you can see everybody speaking and who's over here. Carol, please join us in future sessions as we do this. We'd like that. Some of us are working with startups in different parts of the world, and there's insights from that. Some of us are working with big companies in Brazil. We work with Sabrai. We have other ideas on how to drive innovation. I'll share one idea that will be provocative. Many years ago, I was asked to go to Colombia to help the Colombian government to think about how to build 1,000 startups. And so they said there's a lot of money. They had money to seed every one of those companies, and they had money for us to train and help them develop the businesses and the plans and everything else. And as they told me, there was about $3 to $4 million for us as a potential to make money. And I said after the meeting, I'm not interested, I'm sorry. And they looked at me and said, are you crazy? We're going to give you a lot of money to do this work and we'll get 1,000 startups. And I said, it's not right, because you're going to ask me to take a whole bunch of seeds, but those seeds are grass seeds. And you're going to ask me to throw them out there. And then you'll ask me to water each one, fertilize each one. And guess what's going to come out of there? Grass. And the problem is every now and then there might be one flower in there, but most of them is going to be grass. And I'm going to put a lot of energy trying to get them to grow even, but it's still grass. And they said, what do you mean by that? I said, look, you're going to ask me to take a whole bunch of people who might have a good idea, but they don't know how to start a business. They don't know how to hire, fire. They don't know how to make or sell. They don't know how to finance or marketing. And there's a lot of stuff I will have to teach them, which business school maybe should teach them to do that. So they said, then what do you want to do? And I said, well, why don't you give me the flowers in your country? The flowers that emerge naturally. And these are at the small, medium-sized companies where there's a CEO who somehow got out of there, created a company, does know how to hire, fire, make and sell, does know how to build teams, all that kind of stuff. And yet some of their revenue got stuck. They grew up to 1 million and then they got flat. They got to 2 million and got flat because they got stuck that the idea, the management team, something was wrong in the team. And let's go talk to those CEOs and say, what's the next big idea close to your core business? And let's create an idea that's close to it so we can leverage your existing business, assets, customers, technology, platforms, whatever you have. And then we push that into something which is 10 times bigger than your current business, because all the CEOs expected growth. And so we put a program together called the 10X program for small, medium-sized companies. And we find CEOs who've been around for 4 to 5 years who are tired. They got their revenue flattened out and they're saying, I need to break out. And then you put them into programs and you help them identify some growth areas, and then they take off again. And we did this in Colombia with 800 companies. We're trying to do the same thing in Brazil and roll this thing out as a way to say that these are, as you said, seasoned CEOs, seasoned entrepreneurs. So why not work with those guys and let the business schools teach these guys to try and learn how to be entrepreneurs, let them get a lot more experience working in real companies, perhaps, maybe working in startups, perhaps. But then sometime at a little later, when they're mature, perfect guys to invest into, or perfect people to invest into. So just wanted to chat with you. That's one of the things this team is doing around the world, is driving economic growth through SMEs to do that. Thoughts on that? Or
Fantastic. No, I think that's fantastic. And I think that's the way to go. It's very hard, for the founders to get ready, and they need help. And either the government provide this help somehow, a structure for them to accelerate or to venture build, because as a business venture builders don't do as well as a business, but that's a role that should be from the government. No, I don't believe it should be from venture builders, from a private party. Really.
So Carol, you were interviewed a couple of months ago to help us with another program we were building, which was very focused by the government, Sabrai, which says that if we can get the CEOs of small businesses to think 10x or believe that they can do 10x, and we can get their motivation going, then they'll put that pressure on the teams to get it going also. And so we are doing top down, bottom up as a strategy. And maybe, Carol, we can invite you. We're going to start our training again with 1,500 executives in Brazil. And maybe you can come and tell them about how do you actually drive ideas to commercialization? What are you looking for, teams and all that? Yeah.
Absolutely. Count on me. Count on me.
Carol, muito obrigado. And if you see Sydney, say hi to him. Sydney is a good friend of mine. He and I were, he was the first one to go into venture capital back in 1996, 1997. And he was an entrepreneur in the industry, right? He was an entrepreneur in the industry when it all came together. But I've enjoyed Brazil, and I've enjoyed Brazilian mindsets, because they have all the entrepreneurial energy, creativity, and they've got more obstacles than most other countries. And those who make it over those obstacles are fantastic entrepreneurs. So thank you, Carol. And we'll talk about other things now. We have a regular GIMI think tank meeting now just to check in with